Bitcoin sees massive volume in the futures markets. Retail investors are finally taking a renewed interest in Bitcoin and cryptocurrencies, and regulatory updates from some of the world's key economies. Now, just a quick reminder before we do jump into today's news stories. And the first is to come and join me and Nuggets News. We are doing a meetup this Friday night in Sydney, Australia. Really hope to see you there if you are in the area for a beer and a chat. Please RSVP if you think you will be able to make it. There's a link down below for that event. The winners for the Resistance Retweet campaign have been announced today over on Twitter. So congratulations to the winners that got the $200 worth of Ethereum for that giveaway. And thanks to everyone who participated. The big story of the day today is that the CME's Bitcoin futures contracts experienced record volume on April 4th, hitting an equivalent of 112,700 Bitcoin worth of futures contracts. Damn, it is no surprise to see Bakkt wanting to get into Bitcoin futures trading. Those guys are making big money on these futures contracts. Now, that level of interest is very significant for a few different reasons. The first is, as the recent Bitwise report proved to us, the futures markets actually make up a significant portion of the actual volume of the Bitcoin USD markets, and we are just accounting for the CME here, as of course the CBOE has announced that they are throwing in the towel on their Bitcoin futures contracts, nor did this report account for the likes of BitMEX and others exchanges that do offer the futures contracts, which are also quite significant when it comes down to it. Now, the second is that it shows how much interest there is for these Bitcoin related products from the big money players. Remember that retail investors don't play with CME Bitcoin futures. These are Wall Street traders who are doing this. These are the big trading desks who are doing this. And just look at how keen they are on these products. They did more than $500 million in futures on the 4th of April. That is a serious amount of money being pushed around in the futures markets. Maddie Greenspan, an analyst over at eToro, has said the following: even though Wall Street's contracts are only paper and not settled in Bitcoin, they are still a significant part of this market now. Very true statement. Also to consider that when Bakkt launches their futures contracts, they will be settled in Bitcoin, which is a stark contrast to the other ones. This is massive, and this will introduce a new and a very powerful dynamic to the Bitcoin futures market. So we're definitely looking forward to Bakkt being launched. Now consider all of this that's happening, and then consider why so many people are excited about the possibility of a Bitcoin ETF. It will bring a next level reality in terms of legitimacy to the crypto industry, having these products freely trading on the markets. But the volume we are currently seeing for futures contracts is without a doubt proving that legitimacy for crypto is here and growing all the time. And speaking of big money, Coinbase has confirmed details about its insurance policy. Essentially, that it has insurance for up to $255 million to cover Coinbase's hot wallets, which account for less than 2% of the exchange's crypto holdings. Now, this follows the last month's news that BitGo also has a policy of around $100 million covering their crypto holdings. Now, this is a really welcome sign of maturity in the crypto industry overall, because companies like Lloyd's the insurer in both of these cases, are willing to give policies in the hundreds of millions of dollars to crypto companies. That wasn't a thing a few years ago. This is new, and this is important. Crypto gets more professional by the day, and it is very welcome to see. On to our next story, and that is the retail investor. Retail interest in crypto is returning in a big way. Google showed a massive spike in searches for Bitcoin when the price pumped the other day. Bitcoin in the USA alone became the 7th most searched term last week. To be honest, it's unsurprising that the retail buyers are looking at Bitcoin again and considering the price spike, they're going to be coming back in. Retail FOMO will happen. And of course, it's crazy to stop and think how many people will only return to Bitcoin in order to buy the top again. The next peak, of course, will be way bigger than it was in 2017. There will be much more retail FOMO than last time. And funny, of course, that many of the buyers who loved Bitcoin at 20,000 don't like it at 5,000, nor were they very keen on it at 3,500. The human mind is a very funny thing, isn't it? Bitcoin also topped the search list of China's Baidu. But Lark, isn't Bitcoin banned in China? Well, interesting story. Remember, of course, Bitcoin can't be stopped. China, in spite of the official stance, remains a substantial market for Bitcoin, but a highly suppressed market due to the official crackdown. Chinese investors still want that sweet, sweet Bitcoin, and black market OTC desks are meeting that demand. So very curious to see that happening. Over in South Korea, regulators' attitudes towards ICOs and the crypto market overall may finally be thawing as government officials attending a recent meeting in Seoul said that it was time to take a second look at Korea's crypto policies. The co-president of the 4th Industry Forum of the National Assembly was at the event, and he was quoted as saying the following: "The government has misunderstood the virtual currency and tried to meet the real currency standards, so there are various problems. The industry does not stand still while waiting for the regulatory sandbox authorization. So it is just like keeping it in the box." The chairman of Korea's National Policy Committee stated that the initial reaction of the government was to vaccinate the nation against the first major run-up of cryptocurrencies, but that the market has matured and the need for such stringent regulations are less and less. These conversations, of course, are really far from official policy, but they are nevertheless important in trying to actually judge the direction that the regulators are moving in. We, of course, still have places like Jeju Island trying to push for some kind of an ICO framework, even an exemption for that island. But like the officials said, the crypto economy is not sitting around waiting for Korea to make up its mind regarding crypto regulations. The crypto economy just continues to grow, continues to move forward. Korean companies are moving shop to friendlier jurisdictions. It's just what's happening right now. And the opportunity is currently passing Korea by. I think it would be really useful if Korea were to look, for example, to Japan for some kind of regulatory guidance, as Japan, of course, has allowed ICOs and generally, rather effectively, regulates their exchanges. Meanwhile, over in Korea, we have BitHum, which continues to experience hacks and is faking volume by up to 2,000%. I feel like that's a regulatory failure without a doubt. All meanwhile, of course, continuing to prohibit ICOs. Moving on to Pakistan. The Pakistani government is reportedly set to introduce regulations for Bitcoin and other cryptocurrencies. Now, this comes after years of cracking down hard on cryptocurrencies, during which Pakistan has taken all sorts of anti-crypto measures in order to suffocate its internal cryptocurrency market by, for example, doing things like banning banks from facilitating transactions and accounts for any cryptocurrency exchanges. It finally appears that Pakistan is getting ready to legitimize cryptocurrencies with a standard set of rules. Welcome to the party, guys. The Pakistani federal government has created a new regulatory directive for virtual currencies called the Electronic Money Regulations. Of course, the new laws will focus on strict monitoring and regulation of the industry. All of the usual financial boogeymen, like money laundering, of course, are being cited as primary concerns, but nevertheless, it is a positive thing to see. Pakistan is moving in the right direction on this. It is always good to see when a government really comes out trying to make it easier, not harder, for cryptocurrency businesses to operate within a country. However, I do need to underline that the timing of this is a bit suspect, as some unnamed sources close to the finance ministry have said that this new raft of crypto regulations is being done only to avoid being blacklisted by the Financial Action Task Force, with allegations circling that India is actively lobbying to get Pakistan blacklisted by making accusations that Pakistan is harboring terrorist organizations and enabling their financing via Pakistan's lax financial laws. So there is that, but hey, these are unconfirmed accusations at this point, but something to keep in mind with that story. Now, speaking of India, India's Supreme Court was expected to hear about the country's crypto regulation from the government after a previous ruling giving the government 30 days to present something. As well as, of course, to look at the petitions against the devastating banking restrictions put into place by the central bank, or otherwise known as the Reserve Bank of India, or the RBI. However, the court adjourned with really much progress at all on either of these matters because the government hasn't really come up with much since then. The new hearing date is July 23rd. And of course, these banking restrictions that have been put into place by the RBI last year has put significant strain and unnecessary restrictions on the domestic cryptocurrency industry. And reversing this via the Supreme Court, I think, will be a key ruling to let the Indian crypto industry thrive. And of course, well done for all of the crypto activists in India who are fighting for the right for Indian citizens to be part of the crypto revolution. Keep it up, guys. And our final story of the day is Iran, a country which recently was hit with devastating floods. And it seems that flood-hit Iran will be getting no financial aid from abroad due to U.S. sanctions. The U.S.-led sanctions have prevented the Iranian Red Crescent from obtaining any foreign financial aid in order to assist victims of the flooding that has killed at least 70 people and inundated some 1,900 communities, meanwhile displacing thousands of people. Wow. Stopping aid money going to help victims of a flood. Sanctions, yeah! But that's the power of sanctions, guys. This is what it does. If only we had some kind of censorship-resistant money that didn't pay attention to the political tools of global economic tyranny and financial terrorism. Because make no mistake, that is exactly what sanctions are. And they always disproportionately affect the poorest and the most powerless people in any target society. Thankfully, we have Bitcoin. But yeah, the Iranian Red Crescent actually needs to get on board the Bitcoin train in order to take advantage of that first. But still, it's a theoretical use case at this point. And it becomes clearer and clearer every day why Bitcoin is so important. The world cannot continue to be financially ruled from one city in the interest of one nation. We need to move beyond these petty games as a species if we want humanity to thrive. Sometimes I feel like we are still in the monkeys fighting over a fig tree stage of our societal development. We have the capacity to do more and to be better as a species. And that is part of the reason why I buy Bitcoin. Thank you so much for watching today's episode. If you are, or if someone you know is new to cryptocurrencies, then make sure to check out my free course, Cryptocurrency Explained, which you can find just here in this playlist or over at thecryptolark.org. It covers all of the things that you need to know to make the most of your cryptocurrency journey. Thank you so much for watching today's video. If you did enjoy it, leave a thumbs up on it. Make sure to subscribe to the channel if you are new around here. Long live the blockchain, and peace out the next time.